Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 11th day of February, 2015, and this is the daily report for gold and silver. We do have sharply lower pricing across the board in the precious metals markets. Gold off approximately 1.14% or about $14 on the day. Currently trading $12.19 and change. It has had a low just below this at $18.60 and a high of $12.38.50. We were stopped out of our current trade. We'll discuss that in just one moment, along with our updated models in gold. Silver also trading lower on the day, off about 14 cents. Current print is 1678 and change. The low 1673, the high 1707. More on silver in a little bit. So traders, I'm not pleased, but it is my obligation to report that we were stopped out today. We took a stab at trying to see if we would find some support. We're looking roughly at this area right here, 1237. It is a 50% retracement, and it is a retracement from this rally here, which takes us from a market low of roughly, call it 1160, 1163, up to about 1308. That was the intraday high. I think I have this marked at about 1311. Nonetheless, there's no doubt we can see that in both places we did see gold try to find some sort of support. You can see that action here. We had this triple bottom. On the fourth attempt, we broke solidly through, but the next step was, would it find support at 1237? You can see it kind of traded around there, and you can also see how these areas become very, very important on a technical basis, because when they break, they tend to break hard. Again, here, we get this congestion in this area. We're ascertaining whether or not this market is forming a base or moving lower. And then you get this solid breakdown. Now, in terms of the trade that we were in, we got in or long at 1240. We put our stops at 1227. We risked $13 on the trade. We were stopped out. So when we consider the three trades that we have done since January 1st, we have eaten up $13 of our profits and then $17 on our last trade. Put that together, you've got $30, $54 profit on the first trade. We're still up, but we've given some back. And not so much that concerns me. The question is, what is the market going to do at this point? Because we're now at a 61% retracement level. And we want to see, can the market hold this level? Because if it breaks much below 61%, we're really looking at different models that cannot include a bull model anymore. I mean, the bears have obviously taken control. And what I find interesting right now is that what I thought would possibly move gold up, which is a breakdown in talks and the austerity program over in Greece and paying back their debt, in fact, what we're seeing is safe haven becoming really the US dollar, and to some extent the equities markets, less than we have seen in the past in terms of gold being that safe haven asset. We're not seeing that right now. Now, on a technical basis, we have a lot of reason to look for a potential bottom in this area, but I certainly want to see a bounce. Now, we've seen these bounces here only to see the market drift lower. If we break below this particular point, meaning call it 1218, 1219, and we're currently just at maybe even slightly below, the next real logical level to look for gold to move to is back to 1200. 76% retracement is 1198. But there's something that is more alarming in terms of the critical point that we're at in gold. And to show you that, I want to look at two charts, one a weekly, one a half a day chart, because you can see on the weekly it looks like we're a little bit closer than we really are. Let me go ahead and pull those up. And this is the chart that I'm talking about. As I said, we're going to look at it in two ways, 720 as well as weekly, because on the weekly, it appears as though we're almost right at that point, but we're really not. We're still a good 10 to 20 points away from that, but we'll look at that in a second. But here's my concern. On a longer term basis, we identified the fact that we finally got a break above this long-standing resistance line, and we absolutely went to a new high. We were comparing it against this prior high. We had a series of lows that were moving up, so we had higher lows, we had higher highs. That's significant because that is the definition of an upward trending market. However, these most recent moves where we've given back a substantial portion of that upside move tells us that we're at that point in which if we do break below this point, we're looking on a technical basis at a completely different set of models. So we are looking at a 720-minute chart, and on this chart we have that long-standing resistance line right here. We can see the tremendous break to the upside above that. We can see this tremendous retracement that we are looking at, and the distance between where we currently are, call it 1220, and depending on how much time it takes, we could see it even go to 1200, which is right here, which remain above that particular long-standing resistance. The key is this: when we look at our series of lows, here, higher low, here, higher low, here, high, higher high. So even if this market continues under pressure, if it remains above this long-standing resistance, we would then get no matter where it fell in down here, we would then get a higher low on there, and that would be in line with an uptrending market as long as that had a follow-through of a higher high. A break below this resistance line, or most importantly, these last sets of lows, meaning if we're not going to get a consistent set of higher lows, then any kind of bullish model that we have has very, very little validity within the context of the current market scenario, the market that we're looking at. So we want to absolutely watch this market very closely and look for signs that it's going to correct. But as I said, if it breaks through this current level that we're at, and I've gone back to our 180-minute, very, very short-term chart, but if it breaks through this, it really has nowhere to go but $1,200 per ounce on a technical basis. So traders, I've gone ahead and pulled up a daily chart, standard candlestick format. No doubt when we look at this chart, we have our area of wave 2. This would be that count right here, wave 2 being the corrective wave here. We are certainly now within the confines or territory of this wave. And what that means is because wave 2 and wave 4, the two counter waves, cannot cross, this cannot be a wave 4. In fact, it's still a part and parcel of a wave 3 as long as it remains 61, maximum 76%, and then move back up. Any move below those points, and we're looking at a basic flip from a bull to a bear scenario, not only in terms of our count, but more importantly in terms of the marketplace itself. Now, moving aside from any kind of Elliott wave count, what we want to at this point focus upon is, one, pivot points and candlestick patterns that give us good, reliable calls in terms of a pivot point to the upside, and most importantly, have them correspond with some fib level. This level right here, of course, we have broken through there. We're really right now at that 19 area. We have a 23% retracement at 1213. That's a 23% retracement of this entire rally, though. We want to really focus on this last leg in terms of the retracement itself. And then 1202. So in terms of different levels that we would look for support, should the market continue under pressure, the basic points have got to be 1213 followed by 1202. So traders, as I said, we did have a stronger dollar today. When you look at the Kitco Gold Index of the $14 that gold is trading lower, 10 of those dollars approximately are due to lower trading, and 4 of them to a stronger dollar. So that's the net effect we're getting with the dollar. Equities markets under pressure during the day, but it did recoup favorably. I believe closed close to unchanged on the day or slightly lower. You can see currently trading at 2066 on the E-mini. When we look at the dollar index, this being a weekly, we are up now on the week. You can see that in this green candle. And then, as we said, in terms of oil, this being a weekly chart in oil, we had the previous 2 weeks for the first time beginning to show a little bit of support as we hit the low end of the spectrums, 42, 43 in that area. Still below 50, came up to about 51. You can see on this weekly chart, we are now down at 49.30. And of course, when we convert that to our daily, you can see over the last 2 days, this market has given back much of the gains that it had received over the previous 3 days. Lastly, and very quickly, on a gold chart, this is a chart that I haven't pulled out in a while because there wasn't any real relevant information to look at. However, now there is. If we take a look, this was our cascading Andrews pitchfork, that as this market went down, we were looking at the different channels that it was in. This was the breakout that we saw. Market moves above that. But here, just as we saw a critical area on that long-standing resistance line at the beginning of the show, we are looking at the same sort of scenario here. And traders, lastly, silver. Silver also off on the day. We're looking at a daily chart. Absolute top up here at around 18. And as I said over the last couple of shows, I don't see any real support coming into silver till about 1640, 1635. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.